Bert, Rabobank, tell us about its current situation in the global financial markets and how it compares with other European banks which have struggled a bit.
I think Rabobank, well, first of all, it had a very good year 2008, which is amongst other international operating banks quite unusual. I think we are one of the few that had a profit increase in 2008 compared to the years before, which is perfectly in line with our history, but it's quite a bit odd in these days. We had a very strong performance, let's say market-wise, strong increase of market shares domestically, but also internationally. An increase of equity. So basically all the financials looked pretty good. Again, which is in current market circumstances not that usual.
How did you avoid getting stung by some of the toxic debt that other European banks have been stung by?
I think it has a lot to do with the nature of our bank. We are cooperative. We are not listed. We don't have shareholders, so we don't have the pressure to make on the short notice very high profits. So high returns on a short notice is not the biggest driver for us. We are not affected or infected by bonus cultures. So all the negatives you read in the papers these days are not applicable to us. And I think also on top of it, the fact that we are quite conservative in our lending policy. So investing or lending to markets we don't believe are appropriate or are far away from our business, we don't do that.
Can you give us an example of how your lending practices are more conservative than others?
I think it's being reflected by in general by the policy. So we limit ourselves in terms of businesses we are lending to, countries we are lending to, and also the criteria we are using, whether or not a customer is good for its money. I assume it's more conservative. At least the statistics prove that we are more conservative than some other banks.
Did you invest in or lend in anything to do with these derivatives on top of the US housing market?
We do run investment portfolios for liquidity purposes, generally speaking. And some of these investment portfolios we bought into had a little bit of American mortgages into it. But the overall subprime exposure we have today in our books is about 100 million euros. So that's quite a small number compared to our balance sheet.
Can you talk about the capital strength of Rabo compared to other banks?
I think originally we were a little bit out of sync, you could almost argue, with a capital ratio Tier 1 in the old days of more than 10, and today even pretty close to 13%, which is very high in comparison to the past. Nowadays, it almost seems as if that is the new target where other banks have to move towards to as well. But this, again, it shows our conservative approach. We always have been very highly capitalized. It's also good to know that as we don't have shareholders, we don't have to pay out any dividends. At least not to shareholders. So most of the earnings are being retained. So there's a continuous source of new capital, fresh capital for the bank. So capital typically is growing year by year.
Tell us about Rabo's operations in New Zealand and how savers in New Zealand, what happens to their money?
Yeah. Rabobank only started its international operations about 35 years ago. And amongst the first ones were actually Australia and New Zealand. We acquired a small operation over here called Wrightsons, maybe you can remember, in the mid-90s, shortly after we opened our first offices over here. And that has expanded now to over 30 offices, particularly in the rural parts of New Zealand. We have expanded also in terms of our loan book. We have multi-billion of Kiwi dollar outstanding, particularly again to the rural market. So focusing on the dairy, on the wine, etc., etc., and we'll continue to do so. So that's it's crucial in our strategy that we want to be active in the major agricultural parts of the world, and New Zealand is typically one of them.
How big an exposure do you have in New Zealand compared to the rest of the world farming?
We typically look at New Zealand in comparison, in conjunction with Australia. Maybe that's not the best way of explaining it to it, but after the Netherlands, this part of the world is the most important to us. So in terms of, both in terms of market share, but also in terms of the total size of the portfolio, Australia plus New Zealand are the most important markets to us. In particular also because this market has such an important exposure in the agricultural sector, also in export terms. And these are the markets we feel pretty happy in.
What are the exposures for Rabo if, for example, we see a big fall in farm prices in New Zealand?
Yeah, could you explain a bit more in detail what?
So we've had quite a fall in the dairy price
yeah.
from $7.90 to $5.10,
Yeah.
and there are some people worried that farm prices in New Zealand could fall significantly in the next year or two.
Yeah.
How exposed is Rabo to that, do you think?
We are clearly exposed to the dairy business. It's key to our strategy. We are very much used to volatilities of prices in soft commodities. So it's not a very unusual thing that after a peak in about a year ago in dairy prices, that it would drop. It's almost as expected. Maybe the current levels are very much on the low end, I would say, in the cycle. And given the nature of the business, the quality of the underlying assets, the nature of the farmers themselves, we feel very comfortable with the exposure we have. Typically, this is a business, that's our experience in this part of the world, but similar in the Netherlands, is that it is extremely low risk. Of course, you have to live with the volatility in dairy or in prices in general, but typically risks are very low.
Now, Rabo's putting out some securities into the New Zealand market. Can you talk about how they are compared to other bond offerings or term deposits in Rabo Plus itself? Can you talk about that?
Yeah. Well, clearly this offering we have right now in the market is different from the other products we have. This is a capital security. So in terms of subordinateness, it's different from senior debt and therefore also different from savings accounts or term deposits. But it's also being reflected in the yield, which is clearly a bit higher than the yield on the deposits we are offering. The offering, the price we offer in the deposit sphere is between, on the low end, about 3% up to I think about 5.5% for the very long-term deposits, and this one is offering a yield of 8%. And if you take into account the tax benefit which is on top of it, it can have an effective yield pretty close to 9%. So it's clearly very attractive for investors.
Just in terms of the rankings, God forbid there's a problem with Rabobank. Where does the investor sit in the rankings of who gets their money first?
The ones, it's clear that the senior debt holders are the ones that get their money first, and deposit holders are amongst them. Then the next in line are actually these securities holders, and then afterwards there are still the members in the Netherlands that do hold membership certificates, over 6 billion euro outstanding over there, and then of course we have another almost 30 billion in retained earnings standing out there to cover any potential risk, which indeed, may God forbid, will ever happen.
And the term of the security and how liquid it is in terms of, let's say, a couple of years in, someone wants to get out of it. What's the story there? In principle, it's a perpetual, so it's a long-term instrument. It is tradable, so you can always trade it and sell your position in the bond. But of course, then there is a risk of the value of the bond is trading above or below par. You never know. That's depending on how the market develops. But typically, it's an instrument that is tradable. However, our experience is that most buyers of these instruments are typically buying these things as a kind of a long-term investment, and which, given the high yield, is a very, very strong long-term investment. And how is the yield set? I know that some bonds or securities have a margin above, let's say, a swaps rate. How is this one set?
Now I have to look a little bit to my left-hand side, because now we're getting into the technical details. So Patrick, maybe you can step in.
Yeah, excuse me. For the first 5 years, the rate's going to be set at the higher of either 8% or swap rate plus a margin. The margin will be somewhere between 3.25 and 3.75, and that's going to be determined with the book build this Wednesday. The following 5 years, it's going to be swap rate plus whatever that margin is, and then from then on in, it's bank bill plus that margin.
Great, fantastic. I think that actually covers it. Bert, thank you very much for talking to us today, and that's brilliant. Cheers.
Great, thank you very much.
Yep. Good.
Bye.